daily time frame shows that we are in this bullish run since June, right? But you see, these rallies have been overlapping. Okay, so that means, so this is going to be the first reference to the Elliott wave principle. If this was a trending move, okay, this should have not come down to break this pivot here. Okay, now I'm not ruling out that this could still develop into a bullish trend, but just looking at these waves, this does not constitute a bullish impulse wave. Okay, because a bullish impulse wave would have respected this top, and the next rally would have started above our high here around just below 1.34. Okay, so because it's overlapping, this could be a corrective wave still. Okay, this could be A, B, C, D, E kind of wave, and we would be looking for topping around here. Okay, we have some swing projections. For example, this swing projection puts us towards 1.44, which, you know, to be conservative, we would be looking at this top as our resistance at 1.4280. Okay, so that would be the target for this swing. Okay, so that's the daily outlook. One thing we saw here was that the RSI failed to break above 70, and for the bullish scenario, I don't, that's not a very good sign. We want to see the RSI break above 70. Okay, conventionally, maybe when we first learned about the RSI, we learned that if it's below 30, it's oversold. If it's above 70, it's overbought. But here, the RSI broke above 70. Then if it doesn't break back below 40 and comes back up above 60, that's a bullish continuation signal for me. And here, the RSI breaking above 70 is a sign that there is bullish momentum. So it's actually a bullish signal, a trending signal when the RSI goes to the extremes. Okay, maybe in the short term, very short term, it is a reverse. It's a signal that the market needs to pause. But in the longer term, it shows that there is bullish momentum, or there is bearish momentum, and the market has strength in that direction. Now, if it's going back and forth, that reflects a sideways or ranging market. And if you look at the euro dollar, it's pretty much been in this sideways action since the drop in 2008. Okay, so now we are up here. So let's take a look at the 4-hour time frame. And another thing is, yes, I use multiple time frame analysis. You can't just look at one time frame. You have to see what is happening in the longer term perspective, and you also want to see the internal structure of your of the market. Okay, so here in the 4-hour time frame, we see that we have had this rally, and now we have a very strong correction. You see the RSI. Okay, here it stayed above 40, hit 70, but now it's breaking below 40. Showing us that the bullish momentum is weakening. It hasn't shown us a bearish momentum yet. If the RSI breaks below 30, that would be a bearish momentum breakout, but that hasn't happened yet. So we are pretty much in a correction, still within the context of a rising market. Okay, so here we'll zoom in a little bit. Okay, and we have completed, we are almost going to complete an equality wave at 1.3770. Okay, that would, that's one of the, it's called a Gartley pattern when you have this type of, retreat, when you have this type of correction. Okay, or another term would be an AB equals CD correction. In the Elliott wave principle, in the Elliott wave model, it would be called a zigzag. Okay, so there's different ways to call this. Basically, it's, two swings, 3 waves down, and you're testing. If I go to the 1-hour time frame, you see, okay, so I didn't label it. So let's take a look at the Fibonacci. Okay, so from this swing here, you see this little consolidation. and then we had a swing. We got to start from there, or either one of these. Basically, this is around 78.6% retracement. Okay, and that would be an area to look for support here. What you also see in the 1 hour time frame is that we have a bullish divergence forming. Now, price action right now is too heavy to call a bottom. Okay, I would not want to call a bottom. I would just look for the market to give us some sideways action, give us some bullish candles before considering this to be a possible bottom. All right, and in fact, we have still not satisfied equality of this previous swing. Okay, so again, we should be looking for the market to come down towards 1.3770, maybe even down to 1.37. Okay, if this is equality wave, okay, that means this is 100% of A. This means wave C is equal to 100% of A. But if you extend or you project A a little further, this is the Fibonacci expansion tool, you see that 150% is somewhere down here. Okay, a little bit below 1.37. So 1.37 is a very important pivot, and we know 130. Let's also put down the 138.2% expansion. Okay, so this is the area where we're looking for support for an extended C wave. All right, so basically, this whole area is going to be we're going to be eyeing this area for support. That means if you're in the short here, you might want to start scaling down your positions and look to get out around here unless the market accelerates. You might want to start putting a trailing stop closer, maybe use the Parabolic SAR. For those that don't know what that is, here's the Parabolic SAR, which helps you capture gains if you have already if you're already in the profit. You could use this Parabolic SAR. See, if the market accelerates, this trailing stop will accelerate with it, and then if the market turns around, you will exit as the market crosses the Parabolic SAR. I mean, you have to set it up, or you could manually look for it to cross and then exit. Okay, so we're setting up here that where we might have a rally again back towards the daily time frame now, if the market does indeed respect this rising support. So that's another support factor that we're facing just above 1.37. Okay, so here, if we do bounce back up, we are looking for this top. Of course, we will have to clear the 1.4040 high, so that would be your immediate target, and above that, we would be looking for the 1.4280 high. All right, so that's your outlook for the rest of this week and next week. Let's see if tomorrow, Friday, today as well, these last two sessions of the week, let's see if we will find bottoming here. And if the market is to bottom and rally, okay, let's use this. Now, I'm going to get rid of this parabolic bit because it's just getting a little messy here. Okay, we would use this to help us confirm a breakout back into the bullish outlook, the bullish scenario. All right, so that's what I'm looking forward to in the coming week, a bullish outlook for the euro dollar. However, if the market here accelerates and breaks below 1.37, okay, I'm going to put that on hold and wait for the market to break back above this low here. Okay, so now this is why. This is, see, A, B, C, right? Now, if the market is coming back up and fails to break back above 1.3850 and then continues back down, then we could be developing a bearish impulse wave, which means either the correction is not over and we'll be extending this correction between 1.40 and wherever this ends, 1.37, 1.3650, there would be a huge range, and we could be in a flat, we could be in a triangle. Okay, but if the market rallies and breaks back above 3850, that's going to be an early signal that this is indeed a complete corrective wave. Okay, ABC. We see the ABC correction in the 4-hour time frame, but we go to the 1-hour time frame and we see the internal structure, and it's very clear. A was here, 1, 2, 3, 4, 5. That completed A, and then B was this triangle here, which is A, B, C. But if you break it down even more, it's A, B, C, D, E. 5 waves in this triangle, and now we're breaking back down. So I'm looking at this. Maybe this is our first. This is 1, and maybe 2, 3, 4, 5 coming down towards 1.37.